Hi everybody, it is Wednesday, March 11th after the close, taking a look at the S&P 500, catching up with a quick update of where we're at as of now and following up on the long video from over the weekend. So with our move down today, with our new 2020 low, we got down to 27.07. That is just a tiny little overshoot of our first target to the downside. Gave you targets on that video. The first one was a 27.09, so we took a little look below that. So we've officially doubled down the move from the all-time high to the break of the 200-day, and that stands as our 2020 low right now. This would be a very viable time for the market to maybe chill out for a couple of days and flatten out and maybe head up a bit, maybe try for a little bit of a rally. We've got the ES contract rolling over tomorrow after the close. This is a typical time when the market might try to pull some crap like that, where we have this inexplainable rally for no reason other than the fact that they want to make it hard for people that are still trading the March contract to cough it up and get into the June contract. So that could be what we're looking at for tomorrow. If I'm wrong about that, if we do head lower still tomorrow, if whatever the president's got in store for us tonight when he breaks in on our primetime television to speak to the nation, if that isn't something that calms the markets, if that's something that riles the markets further, or if Europe, is really boiling over again tomorrow and selling off, our next couple of levels down on our way to ultimately our triple down level. First, we've got to get through resolving the ES low that was made Monday after the close. The last time that Trump spoke, they got that thing down to 26.95, and translated to S&P 500, that's going to be like 97, 98, 26, 97, 98. Especially if they get it done now before the contract rolls over to June, because there'll be like a difference in spread and yada yada. Anyway, if we break down below that, the next 50, that would be a double down on the loss of this infamous 30.28 level. That's from back here. That was the July Q3 high. Failed to make that high, take out that high in September. Sold off again, and then finally took it out during the course of the reveal of the Phase 1 trade deal concept on behalf of the White House. So that finally got us above that hurdle and taking off. So this is a really important turning point in the market here. And it would make a lot of sense that if we have a little bit lower to go for this leg, that a double down break of that would be a good mathematical point to be shooting at. And that would get us to 26.6250. Looking at the roadmap, I want to point out that, as of today, our low from March 2020 is now lower than the low we made in March 2019. That, of course, makes sense because our 10-day simple moving average has crossed down through our 200-day. So that translates to the fact that near-term price is lower than price was a year ago. And you can go through your whole list of typical stocks you like to trade, and you probably see that that's true there, that we are now trading below where they were last March. So we did that with our low today. Also with our doubling down now on the break of, where the 200-day and the 10-day cross. So the 200-day is relatively flat right now. That puts our halfway back for 2020 now just about perfectly right on the 200-day. The 200-day is, since we overshot this just a little, the halfway back is at 30.50 and the 200-day is at 30.51. Our 10-day simple moving average is coming down very fast. It's heading down to the low 2900s tomorrow. And if we were to get a little bit of a bounce going, even if we set a lower low during the day and then reversed off of that and rallied in the afternoon and somehow made it above today's range, kind of like what we did here on Tuesday, if we did something like that, that would get us into this gap, looking towards closing up the first gap to Tuesday's close, and then we have another gap to last Friday's close. That's a viable thing, but ultimately, I don't think that we'll really do anything more than just take a run at the 10-day simple moving average, and that's going to be right about here tomorrow, and it's going to be even lower on Friday. So getting above 2,900 is looking like a tougher and tougher hurdle to get over. If we do make a rally that can get us over the 10-day simple moving average, then our next target is going to be the 200-day up at 30.51, 30.50 to 30.51. And like I said, that's also our 2020 halfway back. And I'm not talking about that happening tomorrow. I'm talking about if we do get a rally tomorrow and it turns into a follow-through rally on Friday to end the week. As we get into next week, we've got a lot of stuff coming our way. We've got the Fed on Wednesday. We've got the actual expiration of the ES contract, and then we've got monthly OPEX, and the SPY goes ex-div next Friday. So there's got to be some sort of a, some sort of a time window here where the shorting kind of comes to a halt for a little bit as those, as people want to wait to see what the Fed has to say, as monthly OPEX is approaching, and as that SPY goes ex-div, a lot of people are going to want to be short SPY ahead of that. Okay, because then they're going to have to pay the div if they're caught short while that goes ex-div. Anyway, that's it for the update. Hope this kind of gives you an idea of where we are at in case you, get tired of reading a 25 or 30 long tweet thread during the day, or, my morning note bores you and you don't feel like reading that, then at least I'm trying to do something here to entertain you and give you a catch up on where we are at through this short video. Have a great rest of your evening, and we will see you on Thursday.